A very warm welcome to our webinar on driving consistent omni-channel customer journeys in banking. We are very happy to have Gartner and Microsoft support in bringing this to you. My name is Zubair Ahmed, and I'm the General Manager of VeriPark in the Middle East and Africa region. We will be recording this webinar and the link will be shared on our site. During the course of the webinar, I encourage you to submit questions, which will be taken up during the Q&A sessions right at the end. Banking customers embrace digital channels at different levels, but they all want consistent, seamless omni-channel banking experiences, whether they are retail, small business, or corporate. Yet, they also demand personalization and convenience. And most of all, they want to tell their story only once, regardless of the channels they use. In this webinar, Jason Malo at Gartner will share his insights and discuss the prevailing winds that are driving cross-channel customer journeys in banking, including a look at the crystal ball as to effects of the global pandemic and customer engagement. Post Jason's keynote speech, VeriPark will present how our omni-channel delivery solutions enhance customer experience by serving them digitally on all touch points, while improving sales force performance on digital channels to boost cross-sell and upsell. VeriPark will talk about the use cases, which creates this omni experience. And we will also show you how these journeys actually flow. Our omni-channel product offering is called VeriChannel. And today we are launching VeriChannel as a service. This also becomes VeriPark's first as a service offering. So without further ado, I would like to introduce our keynote speaker, Jason Malo, Digital Banking Strategy Executive at Gartner. Jason supports banking institutions through changes to their internet-enabled banking portals, both mobile and online, and digital customer engagement. He also advises on the best strategic approach to better organize and understand data and how to use modern infrastructure capabilities like cloud services. Mr. Malo spent 10 years with Bank of America in both technology and business roles, leading projects, balancing customer experience and security of the online banking platform. He also managed the development, roadmaps, and go-to-market strategies for global cloud-based products, addressing threats to network infrastructure, personal information, and online commerce over a 5-year tenure with VeriSign. So please join me in welcoming Jason. Welcome, Jason. How are you doing today?
Thank you, sir. I'm doing very well, Zubair. Thank you all for attending the webinar today. I'm really excited to bring this content to you, this perspective to you, and I've had a great time working with all of you at VeriPark, pulling this all together. I'm excited for multiple reasons because I think the setup that you brought to us was exactly right. That customers are looking for a little bit more than just a channel. And also there's some really interesting data that we've been able to collect, and I'm going to share some data that's hot off the presses. First time that I've been presenting it, and I'm really excited to help deliver that in order to give you a full picture of what customers really want and how you can align your services to it. So let me share. Okay, so everything is shared. Okay, great. So I called this, when we were creating it, the multi-channel banking or omni-channel banking at last in focus. And a big reason for that, I think, is that we've kind of gotten beyond some of the real excitement over mobile. It's become a much more mature channel. We've gotten where online and mobile are together. And now we're looking at, we really need to fulfill this cross-channel experience that we've been talking about for some time, and that Zubair actually really set up very well. I also, I like this quote that actually is from one of my fellow analysts, and essentially what he said was, just going digital is not enough. Doing it poorly actually can drive a wedge between the bank and the customer. It can actually create an experience that's more frustrating. And a lot of times I liken the experience that we may have with poorly done, IVR systems where you've got to, call and it has you hit, a variety of different numbers. Those can be very, very frustrating. And as well, we're sort of experiencing that with digital channels now, where customers aren't just excited to have 24/7 access. They have a certain level of expectation that they can get things done. And if you do this well, you can really enhance a relationship and open up communication. But there are certainly ways that are more best practice than others. And so when we talk about what customers want, ultimately it comes down to this, that they want to be empowered. And this is a very long-standing idea that they really want this empowerment. And we've kind of thought about that from a standpoint of any channel at any time. That's been the way that we've really been thinking about this multi-channel approach for some time. And we've put a focus on the internet-based self-service channels and online and mobile, but customers really want to be empowered. And so what does that mean? This is the basis of the survey that I already mentioned to you, that we wanted to ask people about what they were trying to do. That we wanted to see, what are the key things that customers really expect of their financial institutions? And there's quite a few things here, but giving them the ability to keep in control financially is one of the things that they've wanted from their financial institutions for quite some time. I've got historical data that's a bit too old to share at this point, but what it says is that customers want help from their financial institutions, but it's one of the things that they rank financial institutions lowest on. They rank them highest on the ability to sell products to them and deliver the products to them, but really that help and empowerment piece is something that's missing a bit. And so when we start to think about, okay, if we consider this empowerment idea as a key driver for their satisfaction, we started to look at, okay, how do we then map that to how they use the services, right? So this is a multi-channel idea. We want to know how they engage. And what we found is that people who were highly empowered or self-identified as empowered by virtue of questions asked about those different categories above, tended to use the branch a lot more than those who did not feel highly empowered. Or probably, put another way, access to the branch made them feel empowered. Now, I want to be careful here not to say that we need to go back to a heavy branch strategy. It's really not that idea, and you'll kind of see some supportive information from that as we go forward. But access to the branch is something that still gives them a more empowered feel. You'll notice that the more highly empowered, even though the digital box becomes smaller and smaller, you still can blend in that gray box that says 31% multi-channel plus branch. So that kind of combined access to services. Whereas the lower empowerment levels, they tend to rely on phone and email quite a bit more. One quick note I should mention here is that you may see in the bottom left that this is based on our U.S. respondents. I have data for other regions as well, and I chose to just present one because this actually holds true, and most of the ideas here hold true for all of the regions that we surveyed in Europe, Canada, Australia, and Asia. So when we start thinking about, okay, that's what they're using, but how do they kind of reflect the quality here? You start to see that the growth segments around the interaction quality, being able to go to multiple different places and play in multiple areas, the quality of the interaction will obviously drive if people are going to have positive revenue actions of getting more services with you, are going to be more promoting of your services and products. And of course, if you don't do things well, then there's a much higher likelihood that they'll do a negative revenue action, which is to move things from your financial institution. Now, of course, there are outliers. If we look at the interaction quality being excellent, there's still a 9% negative revenue thing here. There are so many more factors at play, of course, than just single interactions. And I think that speaks to the need to ensure that you've got high quality in a lot of different areas. Sometimes we get very fixated on, as we did, I feel, in the last decade, on mobile delivery, and sometimes other areas will suffer. And certainly that's where you start to see some of those outliers. As well, on the poor and fair side, there are people that do positive revenue things, even though they may have one bad interaction. So coming back to the empowerment thing, there's two different other ways I wanted to talk about this. So we already saw the activity based on the customer's perceived level of empowerment. You can also see that if the customer is in a healthy financial state, they're much more likely to use digital, as you can see on the right-hand side, but they're also much more likely to use the branch. And oftentimes it's not necessarily a matter of they aren't sure what they're doing, but often it could also be that the level of transactions, or excuse me, the transactional level of difficulty is a bit higher. But this idea that everything has to go to digital, or you have to be digital to be good, I think is something that we struggle to quantify, because we know obviously that digital is important, but trying to figure out the right blend of services is going to be critical. And I think this really, the one on the top here really speaks well to the idea that you have to have an approach to multi-channel that goes beyond digital, that includes transactions that may be taking place in physical locations as well. If we're looking at the bottom here, you can also see the last note is that if you're looking at the empowerment level, there's a higher level of financial health that's aligned to the empowerment, but it's not quite so direct a correlation as to say only financially healthy people feel empowered. You also can see that certainly in the middle areas, there's a pretty good level of empowerment there, as well as there is in the vulnerable state. Certainly some variance with regard to the numbers here, but there's opportunity because a lot of these folks feel like they are able to do those types of things. And so what this then tells me is that it's a matter of execution and fulfilling what we've been talking about for some time, which is the ability to move things across channels and bring customers from place to place without making them restart their conversations every time. And so we get to the idea that it's more than just channel choice. We've kind of gone through a phase where we've been, one of the buzzwords was mobile first. And I don't entirely disagree with that strategy, but I think that sometimes online first makes sense, and sometimes branch first makes sense. And so we need to conceive of a lot of the customer actions that they're trying to take, those things that I mentioned on that empowerment list at the beginning, from a little bit broader sense, in that it can start in a few different places. And so I've kind of talked about this timeline a little bit already, but what we've had over the course of the last 20 years or so is in the 2000s, this idea of self-service banking really took off with online, where customers were, we're working a lot on creating dynamic UIs. It's something that's real time. You can see information from the comfort of your home. Into the 2010s decade, where mobile, of course, came onto the scene around 2012, mobile banking really started to take off. And so this ability to carry it with you and have your bank with you at all times, and that truly real-time 24/7 opportunity. It also led us to create a mobile-centric engagement strategy, which again, I don't entirely disagree with, because it certainly will be a starting point in a lot of the transactions and a lot of the service requests that customers have. However, it ended up being something where it was a little bit too focused on one particular entry point, and it didn't take into account the entirety of the customer experience and focus on what they were trying to do rather than focusing on the channels. But luckily, and I really do get excited about this, we're getting to a point now where we've kind of understood how to combine mobile and online. Our development capabilities are significantly better. I completed a review of a lot of different vendors, over 40 global vendors in the multi-channel and omni-channel space. And I was expecting, when I started this endeavor at the beginning of 2020, a lot more conversations around native versus hybrid versus web, React, a lot of those different things. And It's become business as usual to do those things. And so now that those capabilities are business as usual, we're getting into more of a conversational, channel agnostic, and adaptive approach, which I mean, I think is really what we've been talking about, what we've been aspiring to for a long time. Now, the challenge, and where I've seen certainly an area that needs to be emphasized quite a bit more, is that we all rightfully have a customer first perspective. But what we have missed in the last few years, and part of it is prioritization toward online plus mobile, but what's been missing a bit is that the employee digital experience is almost as important in supporting some customer journeys as the customer user experience. So we started writing about this actually at the end of last year, ahead of the pandemic. And certainly now that everyone is working from home and that we've seen some of those challenges, I imagine that this is something that has come into focus more brightly. However, this is certainly something we've been talking about for some time, that you have to have your employees using digitally enabled and connected services in order to support the customer journeys that you may want to enable. As much as the customers need to be able to intuitively click through the screens, so too do your employees. And really a key to that is something I kind of find it interesting. We've been talking about APIs, it seems, over the course of the last couple of years as though they were an emerging technology. I've seen them listed as an emerging technology in a lot of different places. And I kind of think it's funny, because as I started in my own journey within the banking vertical, APIs were something that I was writing 25 years ago. And so I thought it was interesting. It was emerging, but what's really been great is that there's kind of a renewed and resurgent focus on how to do them right. And I'll talk about that here in just a little bit. But APIs, I'm sure most of you on the call here understand that they're about creating connectivity. They're about creating sort of, commonly used code base that allows for traversal of information from one application to another, right? That's more or less all that they are. And so having them to be able to, say, here's the exact same process that we're going to use, here's the presentation that we're going to use for mobile, online, possibly into the call centers and your branch software, is critical. As well, it's critical to be able to start to tie into ecosystems and drive value externally from just your sort of focus on financial services and focus on banking. But one of the things that I really want to mention, I'm sure I will reiterate on a couple of occasions, is that creating APIs is not difficult. It's okay, you can create these things and be very prolific about your object-oriented design, if you will, which is what I called it 25 years ago. But the key here actually is that it's well curated, and hopefully you can see that for the internal APIs, we've called it API mediation, and externally we call it orchestration. A big reason for that is just to make the distinction, and a key aspect of this is that when you're a developer, you know what the inputs are and what the outputs are for APIs. A poorly curated, poorly documented mediation or orchestration layer will not last for very long. And so where this has been something that's resurgent is because I really believe that in the past we didn't manage this well enough, and we didn't document it well enough. And I know there were times I tried to use an API and just got frustrated because I was getting unexpected results. One quick story, I mentioned I've spoken to a lot of vendors in this space recently. I had one vendor that told me that they had thousands of APIs, and I don't want to overstate, but we had a conversation that became a little bit more heated than some others that I've had, just because I didn't really care quite as much about the number of APIs they had, but rather how well they were curated and how easy they were to use, and how I could understand what both the inputs were as well as the outputs. When you start doing this right, though, you can begin to create a lot of linkages within your own network, right? And I think some of this becomes very, very obvious, but I have talked to a lot of banks who are looking at kind of consolidation of a lot of different pieces. And what I like to do is actually present, I call this our molecule, our platform molecule. I had a client tell me it looked like a fidget spinner, and now I can't kind of unsee that. But when we start thinking about trying to integrate these different pieces, the key for me ends up being contextually, these molecules make sense, right? There's certain things that are endemic to or just online. There are certain things that are contextually only relevant to branch, but you can connect them through those intelligence nodes at the middle. This isn't the only approach, but just as some organizations I've spoken to have been very disparate in what their legacy technology looks like, they don't necessarily always have to undergo that API, well-curated API layer can create some of those pieces. But also a very similar kind of approach, and I've seen financial institutions learn from doing this internally, is that same kind of chemistry starts to create connections to external platforms and ecosystems. So you have your financial platform on the right, customers are creating their own sort of ecosystem platforms, if you will, social platforms, of course, at the top. And what we had tried to do when the big data, quote unquote, era really started to take off in the late 2000s, that first decade, we were trying to internalize everything. But in reality, with this, we can just start to go, we don't need to internalize it. Let's let the social platform providers maintain their data and understand their data, and we can just connect to them via APIs, rely on those platforms for context, and we can start to connect some things. Now, again, all of this may seem very straightforward and well understood. So we decided on our side, we were going to come up with an idea. How could this actually work, and what could it look like for banks? And what we realized is that when we started to make some connections, if you connect a banking platform to a merchant platform, to an insurance platform, to a government platform, we can start to answer some questions. And by the way, nobody does this. This is kind of a thought experiment that we've done on the Gartner side. But if you think about right now how someone would answer the question, what do you pay every month for your vehicle? Most people, if they're willing to share, will tell you what the cost is of their car loan. But there are costs that go beyond that. There's the car, there's the insurance, there's tax and registration. We could even, if we really wanted to get a little crazy, bring in, a petrol or gas kind of platform here and do some things around that would be a little bit aggressive. But just kind of the idea of total cost of ownership for a vehicle on a monthly basis, you can tie these ecosystems together and start to answer those questions for the customer. And so when you do that, the bank platform is able to sit in front of the customer and answer the question, what's the best way that I can leverage my purchasing power? What's the best car for me based on the amount of money that I have? Right now, we only look at things like APR, cost of the car, interest rates, those kinds of things. But what if you could tell a customer, here's what the full monthly cost of your car is going to be based on not just your credit worthiness, but also your insurance worthiness, as well as local taxes and government fees. That's something nobody's doing, but when you start to connect those things, it's very easy to take care of. And again, the whole thing comes back to this prevailing winds of API resurgence that I have to mention again, it's more important to be well curated than prolific. So when we start to kind of take all of those pieces, I wanted to bring some key best practices in here and start that with sometimes where we see people and banks, I should say, really fall into a common pit here. And that is that the prevailing wind had been that we needed to have a lot of, customers had to be able to have their own sort of choice. We had to make sure that every single channel functioned exactly the same way. And the problem is that ended up being done without understanding what the journey was. So lots of conversation around customer journeys, of course, that I'm sure you've had, but wanted to kind of paint the picture for here's what that really looks like as far as Gartner is concerned. So customer journeys, we can talk about them in a few different ways, but ultimately Gartner's put together 3 kind of key results. First is buy, second is own, the third is advocate. And you can see there are a lot of different elements to this. As you start to look at just some of the different segments that go around those circles, though, start to think about where customers really are best served. Which channels are they best served in doing those things? And it's not always going to be the digital self-service pieces. We had some data that's a couple years old. We're looking to refresh, but it basically said that customers prefer to use mobile if they're doing some things that are more around that own circle, where they're using, they're deepening, they're kind of creating a more frequent cadence around how they're actually taking charge of their own finances, right? So the own piece is really well suited to the digital, but the buy is not necessarily as well suited. They still prefer to use assisted channels, let's say. So the branch, of course, but also contact center to help them to get through what is a more complex process. And frankly, to help them get through processes that have not been digitized from end to end. Advocate certainly is one that's a little bit more difficult, and I'll kind of click through these here in a second, but orienting yourself to that one, there's certainly an opportunity for more sort of social interaction. But what's interesting about that advocate circle here is that while you're looking at, channel engagement, possibly what makes it a little bit more difficult is sometimes that's not even the channel that you have control over. So there's more of an influencing that needs to happen. So just breaking them down a little bit here. The buy cycle, of course, starts with the prospect not yet aware. So there's a marketing element that comes through this. There's a completion of purchase that will be involved here. As customers are recognizing need, certainly there's a lot of opportunity for discovery there. By the way, they prefer to use online banking, or at least had in the last couple of years. They preferred to use online banking to do a lot of the discovery piece. Need, they could find it in a lot of different places, but discovery tended to be a lot more around online. Evaluation and selection end up being a much more encompassing process, and it's in those two particular sections that the multi-channel piece really starts to take off. I chose to bring this particular graphic in, though, because as we're looking at digital and as we're conceiving of kind of the customer empowerment element and we're conceiving of the multi-channel piece, going around that circle requires you to, if you want it to be fully digital, you have to ensure that every single piece is digital. One of the elements that goes into that pitfall that I mentioned above is that sometimes what we'll do is pick and choose based on things that are new, or you're competitively placed needing to make an update. A good example is a lot of the digital onboarding has been a key, and a big piece of that has been the digital signing of information. So what we saw a lot of banks doing was focusing on those elements of the select and purchase pieces, and sometimes overlooking the other pieces that really needed to be taken care of. So it still was a manual process because there were so many other pieces that were not updated. And a big part of that, again, when you start to think about the customer experience, is where does the digital employee experience plug in here? And the digital employee has to be able to follow in that circle just as the customer moves down that path. So when we start thinking about the own piece, the own piece is a very interesting one because the customer already has this, and I like the way that my colleagues in the horizontal kind of practices of Gartner have come up with this idea, because you're turning someone from a user of your services to an owner of their own set of products. And I think this is a little bit of an overlooked perspective, in that we're kind of thinking, okay, well, they're using these products and we're serving them, and sort of we still, as financial institutions, it feels like sometimes retain kind of ownership on making sure that they run well and that customers are well served. And I'm not saying that we shouldn't do that. What I'm saying is that we want to start to encourage customers to view themselves as owners of this. And in order to do that, we need to increase some of those different pieces. One really easy thing to cite is that very often I've seen very, very few instances of full kind of relationship-based banking. It's still very, very product-oriented how we offer terms and deliver services. The online, the mobile, a lot of the things that we do are kind of aggregation rather than looking at them as kind of owners of this space. We look at it as a product delivery still. But what happens is if you kind of start to just make them feel a little bit differently about owning those own pieces, they as well, they feel better about the fees. They feel better about every interaction. The rising tide raises all ships sort of idea here. And so then you start to get into a point where they can become advocates just by virtue of the fact that they now feel that they're able to keep track of their own finances and to do all of those empowerment items that we listed above. So advocacy is one that I think a lot of financial institutions struggle with. I don't know, many of you may have seen noticed on one of the charts that I showed above that I had the positive revenue and then the negative revenue, and then right in the middle you had promoters. We kind of tend to focus on things like net promoter rankings and those types of things, and ultimately that seems to be about as far as we go. We try and really focus on that middle part and fail to kind of get into some of the advocacy pieces. Then the latest has been that we can kind of complement some of the net promoter scores with how people want to rate our apps, which is great. Again, a very good indication, but something that is becoming a little bit outdated as people are more comfortable with mobile, and mobile is a little bit more commonplace. The ability to share, recommend, and help customers demonstrate how you drive the services for them and how they are able to do things is something where we need to get a little bit better about that. We're kind of leading the customers to a point where they are comfortable with what they're doing, but not necessarily comfortable to the point of really saying, hey, this was great. One thing I'll actually confess, when Venmo really came onto the scene, I was quite confused by the memo aspect of that, where there was a social element to the Venmo payment app, and people could send a payment and then share and make a note about the payment that they had just made, or the the money that they had transferred to one of their friends, and it was really kind of amusing because you could go and you didn't even have to know what the customer demographics were, but based on how people felt about that, you could tell that they were a little bit younger. And so I don't tend to get into the millennial sort of trying to put millennials into a specific area of engagement and a specific perspective, but it made them feel like they were able to do so. It was an interesting aspect of empowerment and advocacy that when it first came out, I will confess, I didn't quite understand, because again, I was so focused on delivering product. I was so focused on just, making sure that these things worked, rather than understanding that there was something that it was a level of empowerment to them, that they could make this person-to-person payment or, very simple transaction, but then also, that they're happy that they could do it so easily. The other piece, and this is one that I get very passionate about, is being able to measure performance. A very, very common pitfall is that financial institutions will still manage their channel performance in isolation, rather than viewing the full customer journey. And sometimes it's really difficult to say, here's the right way to do that. And so in a different survey last year, we asked financial institutions how they measured. And what we found was that less than half of them measured some of the metrics that we had put forth. But then we asked, well, how effective, of the ones who were doing this, how effective were they? And you will have an opportunity to download this presentation afterwards. So I know the text at the bottom of this is very small, but I called out a couple of them more specifically. The one on the left-hand side is the most effective measurement that was out there. 86% of respondents said that tracking the number of clients actively using their online and mobile tools was highly effective in assessing the successful implementation of their digital investments. The lowest rating was 78%, so still pretty effective, and that was percentage of service inquiries initiated using digital platforms. Now, I've actually done a deeper analysis in a note that I have just written, but even just those two things on either side of the spectrum are really interesting in the way that we're kind of looking at this. And my key mention to this is that all of these are really effective. So I may sort of denigrate a little bit here or say this needs to be adjusted, but almost 4/5 of respondents said that all of these are effective. But looking at the one on the far left, the percentage of clients actively using online and mobile tools, I would have thought this actually would have even been higher than 86%. But what I found when I started talking to some banks about it was that there was some level of confusion on what the word actively means. And so I would highly encourage you to be able to measure this, create a baseline. In an ongoing way, you need to be able to measure how not only the number of customers that are doing this, but how effective that is towards saying, yeah, your digital investments are paying off. But the other piece really ends up being you need to be clear on what active means. A good example is that there are some companies that are out there who will say that they have a certain number of users that are using their platform, and it never changes from number of users. And it ends up being a situation where you can sometimes read through the lines pretty clearly to see that they might have had people sign up, but the usage is actually fairly low. My recommendation to define active would be someone who has used it within the last 30 to 60 days. You might even track them both separately. Now, when we go to the other side of this, and I think this one is a little bit more interesting, the percentage of inquiries initiated using digital platforms. Again, very effective. I don't want to say that this is not something that you should track. But what's clear is that if we're just looking at initiated, and that ends up being the key piece here, the service inquiries are initiated on a digital platform. To me, I believe the reason that this is low is because they cannot be fulfilled using digital platforms. Now, a lot of times what we want to do is think about this as, customer self-service, customer self-fulfillment using digital in its entirety. But this really is where the employee experience needs to come in. And so I could literally talk about this slide for 2 hours, and I certainly won't do that to you. But ultimately, when you get this deck, I would recommend looking at all 10 of these and implementing them as part of your measurement piece. Because as I mentioned, when we did this survey, most of these were tracked by less than a third, even though they're all highly effective. But also really kind of think about what you're tracking here. And I would look at this and put a completion rate to match this and work through the metrics here in a pair, using the initiated as one metric and the completion rate as another. So getting into then how we can start to think about what we're calling the Great Reset. And this is the three-phase approach that we have in responding to the global pandemic. The first phase will be to respond, second to recover, and third to renew. And when we talk about the response piece, it's really how do we rationalize and renegotiate what we've been doing. In some ways, we're of course already doing this. There are a lot of things that we need to do tactically. There are a lot of things that we've had to do and sort of scramble to put in place. And by and large, financial services has been one of the least impacted out there, based on some of the survey data that we've got internally, just with regard to where customers are seeing impact. On the recover side, this is to me sort of a learning area where you're looking at opportunities to improve your efficiency ratings, or improve, how you're spending and where your productivity is going to come from. And the new is what lots of folks like to call kind of the new normal. Now, when we started to think about this from a banking perspective, when we're looking at COVID, when we're looking at the pandemic, for the banking team, we really looked at 4 different pieces. First is the smart working. Of course, everyone is working from home now, and there's a lot of adjustment that needs to come from that, and certainly we see that there are going to be impacts, and honestly, this is one of the 4 here that we think is probably going to backtrack maybe the least. We're going to be, the new normal is going to be much further along in that smart working path. But I think for this particular conversation, and probably something that I get the most questions on, is what's going to happen with regard to the branches. We've already been talking about this for a while. Is this going to accelerate the branches going away? And what I would say is no. Put simply, no. I think we've gone through a phase where people have talked about the branches going away. We saw earlier within the data that customers still rely on them. And so the ability to adapt to what's going on right now is going to be really imperative on our ability to kind of maintain our services, as financial institutions have been able to do, and customers acknowledge that. But a lot of it is going to be on our ability to measure again. The number of financial institutions that I speak to that say they cannot tell me what their transaction mix looks like in their branches is it's more than 80%, I would say. And don't quote that number specifically. That's a guess, a quantification based on qualitative information. But that's really a challenge. That we talk about the debranching, and we've talked a lot about the branches going away. But when we start to think about what really is the transaction mix and being able to manage that centrally within your digital engagement strategy, it's just not there. And so the key ends up being really in this whole response piece as it pertains to debranching, and quite frankly, I think in terms of the multi-channel strategy is your ability to understand what customers are doing in the branch. And being able to do that now is going to be crucial, because that respond phase is going to include things like customers saying, I tried to do this online, but, or, yeah, I did it online, but I really prefer to do it here. There's going to be a transactional backlog, if you will, of things that people are going to start to do, and the branches will be busy for, let's say, the first couple of months with people who are kind of giving you that level of feedback. And so being able to understand those transactions is going to be crucial, because those are the kinds of things that are going to stick in the branch. That's the stuff that people want to do or need to do or feel like they can't do anyplace else. There's a real opportunity for lessons here. Within the recover phase, though, there's going to be people starting to readjust. And again, this is going to be about measuring and understanding what's happening. And so that transactional volume by channel type is going to be really important. Now, a lot of people think that there's going to be some stickiness with regard to things that people are doing online. I talked to a bank yesterday, actually, who had said that their target, starting 2020, their target for digital transactions was 80%, and they've achieved that through COVID because they weren't, customers weren't able to go to the branches. And so the discussion that I'd had with them was how not to backslide. How to make sure to maintain that 80. And I would imagine for organizations on the phone, there's probably a similar story with similar numbers. And so the analysis on the active customer decrease will certainly be interesting here, where customers are going to be using things less, knowing who they are, where they are, demographics, transaction types is going to be critical. And then the renew phase is certainly going to be around how do you supplement the customer experience with the employee experience. And there's going to be a couple of different areas where we really need to focus. The question I get all the time has been, does this mean video banking is going to have this surge? And I'm a little skeptical that video is really the key, because I think our first step is just making sure that we can continue on those customer journeys. And so to me, the video piece is a little bit of a question mark. But I do think that there may be some opportunity as we've worked with this virtual working, that maybe some of the transactional stuff may move from branches into contact centers. Now, if you kind of digested the data above, you might remember that, well, the people that were financially well off and the people that were financially empowered were using the branches a lot more. And I agree. I think that's something that gives me a little bit of pause on kind of looking into the crystal ball for that particular piece. But it may just end up being a confidence element, and customers are more accepting of the change and more accepting of digital. So I think there may be an opportunity, instead of trying to figure out how to move things from branch to customer self-service, how do we move things into more of a virtual serving level? And then the last, and what I'm really hopeful for coming out of this, is to understand, again, what people really value about the branch. And so as much as we want to think about sort of the digital piece from a consumer perspective, that digital employee engagement, we'll be able to really, really focus the software and the capabilities of the branch, because we'll have a much better understanding of what people really and truly value. So I think what I would really like to do is just sort of summarize a lot of this and kind of go back to the original question of what's really in focus here for multi-channel and omni-channel engagement strategies. And that is that we're looking at the entirety of the customer journey, and we're thinking about what the endpoint is. And so one thing that has been helpful and kind of conceiving of this and sort of saying, what does that mean, is that when you're thinking about customer journeys, and hopefully you're doing journey mapping that includes your digital channel partners, as well as operations, as well as physical locations, start with the endpoint when you're doing those mappings. It's okay to have a mobile first perspective, because certainly that will change your experience on the mobile site. But sometimes it's really helpful just to start from the endpoint, because then you'll see where a lot of those critical engagement points are between your digitally enabled employees and digitally enabled consumers. In that, the employee experience ends up being what is probably one of the more overlooked but critical elements to the new normal. Having the employee able to pick up a conversation, as Zubair mentioned at the very beginning, having them be able to start a conversation with a customer who's already traversed through a couple of channels seamlessly. Not only is it going to make the customer happier that you've already known what they've been doing, but also it'll start to cut down on those digital employee times. I used to work a lot in the fraud space, and there was the ability to do voice recognition. It ended up being that the greatest benefit from a business ROI perspective was not necessarily reduce fraud, but voice recognition actually helped cut call times down by like 1.5 minutes, but as far as one vendor was concerned. And so that was really kind of an interesting thing that enabling that multi-channel or omni-channel approach is actually probably going to cut down your call times, as well as make people feel better about the experience. This one on the third item here is kind of my bumper sticker, if you will. I mentioned that I get fairly passionate about the metrics piece, and that's certainly true. I think that we need to start recognizing that there's a difference between reporting, the things that we use every day to manage the business, and insight. I remember hearing when the quote unquote big data phase really started, that we were looking for answers to questions that we didn't know to ask. And I used to get frustrated, because I thought, we don't know the answers to questions we do know to ask. Why don't we start with those? And I think that still makes sense. I think that statement still holds very, very true. But what it does miss is kind of the distinction between what we're talking about here. And really, reporting to me, when I ask organizations, whether they be vendors, whether they're financial institutions, about the reporting that they have, I'll get a dashboard or a spreadsheet, see something like that, but it doesn't really explain what it tells me. Oftentimes it's something where it's a very quick view into being able to know if things are going well, rather than how to direct the investment, how to direct the project roadmap. And so reporting to me ends up being a very, very key element to what we need to do on a day-to-day basis. But insight is certainly those questions that we didn't know to ask, really. And that's where you've got to have the ability to do, heavy duty analytics based upon a well-governed and well-managed set of data principles. If you think back to the molecules earlier, at the center of every single one of those molecules was intelligence. And insight comes from tying all of those intelligence modules together. And lastly, the reset has been obviously incredibly disruptive. When we look into the crystal ball, there's still enough cloudiness, if you will, as we peer into it, that it's sometimes difficult to see what it's going to look like. But certainly there's if you want to look at the silver lining here, there's a silver lining where we can really finally understand what it is that customers value from the branches. And not just necessarily to be able to say, here's the value of this channel, but what it is about the branches that empower them, why they feel that the branch is necessary. And the last story I'll mention as far as that goes is that we did a survey and we asked people, why do they select their bank? How do they select their primary bank? And I won't tell you that branches were high on the list. I would say overall it was probably the 7th thing that was there. But what's interesting about it is when we started looking at it demographically, younger generations value the branch more than older generations did, which is something that was very counterintuitive if we sort of read what's kind of most of the articles that are put out with regard to younger generations. But when we dug into it, we found that they wanted it to be something of a lifeline. They looked at it as something where if they had trouble, they could go to it. And so it was an aspect of their empowerment because they weren't sure about certain things. They were much more comfortable with digital. They didn't want to go to the branches if they didn't need to, but they valued their proximity higher because they knew that they were earlier in their process of learning how to manage their finances. So when we take a step back and look at all of these different things, I think there's a lot of opportunity here. There are so many reasons to be optimistic now. We've got channels that are beginning to work together. There are tools that we have to pull them all into concert with one another. There's employees that are really going to be getting engaged here. We've gone through a global pandemic that's helped us to understand that digital is something that will help us to operate and continue to provide services to customers. Customers recognize that, and we've got a very clear path to being able to empower customers in a way that includes broad channel choice, but is really kind of well oriented toward delivering on this omni-channel or multi-channel engagement strategy that we've really been aspiring to for a long time. So I thank you all very much for your time. And Catherine, I'd love to turn over to you for demo. I'm really excited to see this, and hopefully everyone on the call will see that there's a pretty good alignment to a lot of the stuff that we at Gartner are talking about.
Yes, thank you very much, Jason, for sharing these insights with us. I see that there are quite a few questions already, so you will stay with us until the end of the webinar, where we will answer the questions for you and for Veripark as well. To the audience, if you still have questions, you can keep asking them using the questions tab in your control panel. But before going to that part, I would like to introduce Girish Kashyap. He will present how Veripark responds to these topics that Jason just raised, and show how our multi-channel solutions allow to drive consistent customer journeys. You will notice that parts or the demo parts of Girish's presentation have been recorded because since we're still all working from home, we wanted to avoid any possible issue with failing internet connections. So it will be a mix between a live presentation and recorded one. So that being said, I now give the floor to Girish. Welcome, Girish.
Thank you, Catherine. And thank you, Jason. I think that was a very insightful session. So let's begin the second part of the webinar today. What we are going to see is a customer's journey with a digital bank. And what we will cover is an agenda as follows. A quick overview of who we are as Veripark, the Veripark's Omni-Channel solution as a service, and then we will look at 4 distinct customer journeys: digital onboarding, using the channel as a payment instrument, as a savings instrument, and as a financing instrument. And then we wrap up. Who is Veripark? Veripark is a global solutions provider focused purely on banking and financial services and enabling financial institutions to become digital leaders. Veripark has been doing this for 21 years now, and today stands at about 700 employees globally. Veripark is the only global independent software vendor when it comes to the Microsoft suite of partners for banking and insurance industries, out of a global partner base that Microsoft has of about 340,000 partners. Veripark has been serving customers in 30 plus countries worldwide, and what you see there is a representative sample out of the entire set of Veripark's portfolio of customers. Veripark operates across 16 offices globally, covering pretty much all places, right from the US to Africa to Europe, Middle East, and Asia. In terms of Veripark's solution suite, there is Verichannel, which is the omni-channel experience, which is what we will focus on today. A branch automation piece called VeriBranch, which focuses on the front office users in branches. And this is as a continuation of what Jason clearly outlined, that branches might really need a rethink from a bank's perspective. Veritouch, which is an end-to-end CRM solution, focusing on the customer's journey with the bank, right from acquiring customers to retaining them, to selling them more products and services, and ensuring that customers remain loyal to you. VeriLoan, a specialized loan origination and servicing platform, which caters to both retail and corporate customer segments, handling credit origination across a set of products. Supporting all these solutions is an integration layer, which includes unified API interfaces, all built not in a prolific manner like Jason said, but actually curated well enough to make sure that all these solutions talk to surrounding systems in use in banks, both internal as well as external. So if we look at Veripark's omni-channel delivery solution, Verichannel, it is a platform which manages and supports seamless, consistent, and engaging customer journeys across touch points that customers prefer in their interactions with financial institutions. At the same time, ensuring that the channel coverage remains rich in nature and evolving in nature. Some of these channels could be online and mobile banking, but you could also look at tablet devices, speech banking, social media, e-wallets, chatbots, contact centers, and of course, ATMs and offsite kiosks. For the branch, there is branch automation, which we discussed, which enables front office users to become universal bankers, enabling them to offer an end-to-end transactional capability for their customers. These solutions can be deployed in a variety of manners, both on the cloud as well as on-premise, and there is a history of successful deployments of the solution across both these hosted channels. And now what we are launching is Channel as a service, which is completely provided for on the Azure and enables to a bank to establish its digital credentials on the mobile platform in less than 90 days. Let's take a look at some of the potential scenarios that are possible across Omni-Channel as we spoke about. Channel as an Omni-Channel solution becomes the one-stop shop for a customer of the financial institution for all of their banking needs. It could range all the way from onboarding to account management and cards management to using it as a payment service, as fund transfer service, as financial calculators to help them figure out how much they need to save and how to track and manage their expenses. And at the same time, enable the bank to use these channels as a marketing platform to reach out to customers with new products and services that they bring to the table. And when we now couple these channel capabilities with new and emerging technologies such as augmented reality and machine learning, that is when you now make this whole solution more powerful in nature, enabling customers ease of life when it comes to undertaking a transaction. We will now showcase specific customer journeys using some of these features in these solutions, and we have brought to you 4 distinct journeys for a customer: onboarding, payments, savings, and financing. Let us introduce our persona, our customer for the day. Archie is a tech-savvy Londoner who lives in Greenwich. He is not only living himself there, but he has his entire social circle there, including his friends, and the fact that he works in a place which is close to where he stays. He currently lives in a rented apartment and has been thinking a while to buy a flat, an apartment, or a house for himself. And he realizes that he really today doesn't have that much amount of savings to afford a down payment. However, he is determined to follow his dream, and we are asking a question: will his bank help him reach this goal? And that's what we intend to answer today. Let's take a look at the first journey, which is onboarding. And before we get into the journey, a quick look at the key features that the solution provides to handle and support digital onboarding. First up, multi-channel support, which implies that a customer like Archie could use multiple channels in order to complete his onboarding exercise. He can start a particular channel and close the onboarding on some other channel. And during this switching of channels, enjoy a seamless and consistent experience. Artificial intelligence and machine learning enabling a customer ease of use in handling the solution in terms of data entry and data validation, and even going to the extent of self-identification. Digital signatures, especially on application forms, agreements, any other kind of contracts. Identification mechanisms, either through a selfie on a mobile phone or through a video chat with a banking agent, making sure that the customer is who he claims to be. And all of this finally resulting in an account and customer generation seamlessly in a straight through manner, integrating with backend systems. Using OCR technology to extract relevant information from the documents that are provided by a customer during the onboarding process, thereby making sure that data entry is reduced, as well as making sure that accuracy of data that is presented to the solution is improved. Once the account is opened, follow through to fund the newly opened account, which is what we mean by saying initial funding. And of course, a facility to upload a variety of documents, which are always something that needs to be kept in mind when you have financial institutions operating in a regulatory space. So having discussed some of these features, let us now take a look at a demonstration of the onboarding journey. Now that we have seen the features of the onboarding solution, let's see how Archie onboards himself using the mobile banking app of the new bank. So he has a mobile banking app in front of him. He starts his onboarding journey by becoming a customer. And the first thing that he's presented with is a variety of accounts or cards that he can onboard along with onboarding himself. He chooses open an account, and the first thing he's asked is to provide some documents. The first one among them is a passport or a valid ID proof. So he brings up the passport, scans it, and uploads the passport. The next one is a business card. So he captures an image of the business card as a photograph and uses this image. Once this is done, you will notice that the solution automatically applied OCR on top of these two documents that we uploaded and used the relevant information to pre-fill some of the fields that you see on the screen. It also automatically created an application number for this particular process. Archie is also provided with other options. For example, whether he would like to receive a statement by email, language of communication, monthly income, and so on. And so let's say he puts his monthly income and the purpose of the account as savings. This brings him to a stage where he has to do a liveness check. And this liveness check, one of the options could be to do it either through a selfie, which is what Archie is doing now, or the other option is to open a video conversation with a bank agent and then ask the bank agent to verify that Archie is who he claims to be. Once the selfie passes, Archie is led to a section where he has to select the underlying accounts or products that he wants to open. One important thing on the selfie is we saw three different ways or three different positions of Archie's face that the solution asked for. That can be programmed to include many more random asks. So it could be move the head from left to right, top to bottom, wave the hand, all of these to make sure that it is not a static image which is being used to fool the system. Archie selects a current or checking account and a credit card as the two products he wants to open. And of course, he would like a debit card along with his current account. On continuation, Archie is presented with an account opening form, which he can read through, and he can also append a signature on this form. So Archie appends his signature, and then immediately he is presented with a login screen. So his persona has been onboarded into the bank, an online account has been created for him, and he can immediately log in. So based on the mobile number, he gets an SMS and then he can log in into his new account. And once he logs in, he can see that a zero balance account has been opened for him. Plus, the fact that he requested for a card meant that a card also has been opened immediately for Archie. For the zero balance account, Archie can actually now go ahead and add some funds into this account. And again, he is provided with two options. Either he can use a debit card to add funds to his account, or he can use a check and deposit it in his account. If he uses a debit card, he can now use any other bank's debit card and fund his account. And that is what he is doing. So Archie is confirming that this is what the amount he needs to transfer, and then he does a payment. And once this payment is done, he gets a confirmation that the payment has been done. So what we saw just now is an entire onboarding journey on the digital channel using the mobile application. And this gives Archie not only allows him to onboard himself, but also opens the account and the card and gives him an opportunity to fund the newly opened account. So we just now saw the digital onboarding journey. Let's now take a look at how Archie can use the Omni-Channel solution as a payment instrument. A quick look at some of the key features of the payment solution within the Omni-Channel suite. Archie can, of course, create and manage billers and bills. And once billers are set up, bill payments can be made. Bill payments can be made by a variety of possibilities. One of them is to take an image, apply an OCR on top of that to pre-fill data, and then go ahead with the payment. The other is NFC enabled payments. So if there is an NFC device, the mobile phone turns itself into an NFC uh, instrument, and that can do the payment. Or it could be a QR code based payment. So if Archie is presented with a receipt, bill, which has a QR code, it can be simply scanned, and that scan would result in relevant data being extracted and then used for payments. The solution also provides support for international remittance providers such as Western Union or MoneyGram based fund transfers. Other kinds of fund transfers, which could include within the bank, domestic, as well as international fund transfers. A customer could set up future dated payments, and the system will keep track of those and execute them the day it comes up. And of course, a customer can set up standing order for regularly required payments based on the schedule. Now that we have seen some of the features related to payment, the next journey that we will see explains how Archie in our story uses the channel as a payment instrument. Archie has been using his new account with his new bank for some time now for a variety of transactions. Archie has received a utility bill from the water company that he needs to pay. In the normal course, Archie would have used a mobile banking app, perhaps gone into available credit cards that he has, figured out the balance, and then decided which one he should use to make the payment. But in his new bank, he has the benefit of using augmented reality. And the augmented reality helps him to understand how his cards are placed just by scanning them at the touch of a button. So Archie invokes augmented reality and he starts scanning his cards and figures out what the balance is on those cards and the last few transactions done on these cards. This is card number 1. He has 2 other cards for which he needs to understand the same thing. So he figures out the balance and the transactions. And just to make sure that the card is correct, he goes back to the first one to just reconfirm the available balance, which is what is shown there, and then decides which card that he needs to use to make the payment. Now that he knows which card to use for the payment, he brings up the payments menu and gets into bill payment. And he is presented with an option to take an image of the bill using the camera of the phone. So he brings up the camera of the phone and takes a photo of the bill and uses that photo to update information on the mobile banking app. What has happened is OCR technology has been applied on the presented bill. Relevant information has been picked and filled into the respective fields, allowing Archie to just scan both the cards as well as the bill, avoid data entry, and just make sure that the data presented to him is correct and go ahead and complete the payment. This is one form or one type of payment that Archie does. Later in the evening, Archie goes for coffee with his friends. He goes to a nearby cafe in Greenwich, keeping in mind the prevalent social distancing norms. And once the coffee session is over, he's presented with a receipt for the coffee that they had. Now, one of the options that Archie has to pay the bill is, of course, to use the mobile banking app. But there is also another option, an e-wallet on his mobile phone, converting his mobile to a wallet instead of carrying an actual wallet with him. The e-wallet is more or less a new channel. It is a more fun way of doing transactions. It presents to Archie all the ongoing offers that the bank has targeted him for. In addition to the campaigns, it also allows Archie to undertake some transactions, like converting some purchases to installment plans, maybe postpone a statement, maybe apply for an annual membership fee refund. It gives him a choice of his credit cards with a view of all the last transactions, including how his spending pattern has been on specific cards. For this particular card in question, he can, of course, get into more details of the card, look at the renewal timeline, make some payments, and so on. But it also allows him to make a merchant payment. And that merchant payment is what he will use to make the payment towards the coffee receipt. So he brings up merchant payment, and this is the receipt that he got. The receipt has the details of the spending plus a QR code. And it is this QR code which will be scanned by the solution to determine the bill details. As soon as a QR code is scanned, the relevant information from the receipt is brought in into the wallet app, allowing Archie to reconfirm the details once and then go ahead and make the payment. So this completes Archie's journey as far as payments are concerned and demonstrates the use of the mobile phone as a payment instrument. We just now saw two different journeys, onboarding and payments. We now move to the third journey that we have lined up for today, which is Archie using the channel solution as a savings instrument. If you look at the channel solution and its features, some of the key elements include an ability to undertake calculations to determine how much of savings would be required in order to reach a goal. So once you know the savings, you can set up a goal. Once you set up the goal, you can monitor the goal on a regular basis. You can then go ahead and set up specific savings accounts whose only purpose is to accumulate those savings, which can then be set aside for the particular goal. Set up alerts which continuously monitor the level of savings reached, and once a threshold is crossed, will alert the customer by various mechanisms, email, SMS, and so on. The solution could also be used to tag expenses across different categories. And some of these categories could be like entertainment, travel, utilities, and so on. And once those expenses are tagged, you can monitor those expenses, compare them with any budgets that have been set up, or even look at the trend of expenses. And all of this, therefore, enables a customer to look at two sides of the same coin, savings and expenses, and hence manage personal finances right from the channel device. Let us now take a look at Archie's journey when it comes to savings. Let's now take a look at how Archie can use the Omni-Channel solution as a savings instrument. Archie is browsing his bank's website, and he's on a public website, and he decides to see if there are any options for mortgage financing. He comes across a finance calculator, and this finance calculator gives him an option to undertake calculation for different types of loan products. He picks mortgage finance. This launches the mortgage finance calculator, and this calculator now gives him an option to play around with some numbers. Archie is interested in a loan of 250,000 GBP, and he wants to take the mortgage for a period of 10 years. So with this, Archie can figure out that for a tenor of 10 years at an interest rate of 2.15%, his monthly installment will come to about 2,300 odd GBP. And he would need to save 50,000 GBP towards the down payment for his mortgage. Once Archie knows this information, he goes ahead and starts saving towards accumulating the 50,000 for the down payment. Archie is registered for online banking thanks to the enrollment that he did earlier. So he logs in into the online banking of his bank, and he's straight away brought into the goal section. Archie already has put a goal for purchasing a car, and he's happy to note that his goal for the car has already reached 75%. He adds a new goal towards down payment for his mortgage. From a source account, which is his current account, with the target amount being 50,000 and starting today and ending 2 years hence. And Archie would like to transfer a sum of money every Monday and every week. And the solution tells him that an amount of 476 GBP will be transferred to a savings account. He puts a alert threshold of 80%, asking the system to alert him via email. This having been done, the system gives him a schedule of how the amounts will be transferred from his current account. He agrees to the terms and conditions, and his goal is set up. The solution not only enables him to set up a goal, but it also enables him to keep track of all his expenses across different categories. So for the month of June, at one glance, he can see how much he has spent across different categories as compared to how much was budgeted towards those categories. And this spending across these categories has come as a result of tagging his expenses into different categories. He can not only compare his expenditure against a budget, but he can also see the trend of those expenses over a period of time. So if he selects entertainment and traveling and brings up the last 6 months, he can see how his money is going over a period of time. And he notices here that the traveling amounts have steadily come down over a period of time, given the current situation that we have been in the last 2-3 months. So this was how Archie could set up a goal and also use the solution to track expenses. Now, this having been said, Archie also has an option to view the goals on his mobile phone. So whatever he set up on the online banking, he can track them continuously on the go using his mobile banking app. Here is a section which enables him to view budgets and goals. And when he gets into goals, so let's say Archie has set up the goal for down payment for mortgage. A couple of months later, he comes and takes a look, and then he notices that his car goal is now standing at 80%, and the down payment for mortgage is already at 20%. So this gives him a very clear picture of where he is vis-a-vis the goals that he has set up. He can track them on a consistent and continuous basis, irrespective of what channel he is using. So this was our peep into how Archie could use the omni-channel solution as a savings instrument. So we just now saw how Archie used the channel as a savings instrument. The last journey that we will see is about Archie using the channel as a financing instrument. Some of the key features pertaining to financing in the channel solution include multi-channel application capability. That is, irrespective of the channel that Archie uses to interact with the bank, Archie is able to initiate applications for a product on one channel and continue the application process on different other channels in a seamless and consistent manner. Coupled with that is the self-service or the assisted channel support. So if a customer gets stuck at any point in the process, customer is assured that there is always the assurance of reaching out to somebody in the bank for support. Some of these application journeys could include the use of bots or virtual assistants, and we will see one such example today. Some of these journeys could be long running, and lending applications typically fall into this kind of a category, which means that banks need to think about omni-channel experience when it comes to enabling their customers in executing long-running journeys smoothly. Built into these kind of financing journeys are actions on KYC and integrations with backend CRM systems to make sure that relevant information is taken from the customer and the relevant processes are put in place. On top of these kinds of integrations, ability to put, of course, OCR to read relevant information or artificial intelligence in helping parsing of documents. Digital signature to help customers to sign digitally on either application forms or agreements. And finally, the ability to undertake instant decisioning or even disbursement through integration with various surround systems in a straight through and seamless manner. So with this, let's now take a look at the last journey that we have for you today, which is around financing. Let us now see Archie's use of the channel solution as a financing instrument. Archie is outside in a public place and accesses his mobile banking app in order to review some recent transactions that he has done. Archie logs in into the mobile banking app and is immediately presented with an offer for mortgage. Archie is very surprised because Archie has recently set up a goal towards saving for a down payment for a mortgage. Archie reads the offer and is very interested in understanding more. He notices that his bank has given him 4 different options to carry the conversation forward, either to chat or to talk to an advisor or visit the branch or ask one of the bank representatives to visit him to explain the offer in more details. Archie decides to select chat because he is in a public place, and that brings up the bank's chatbot called Faraday. Faraday has the context from which Archie has invoked it, which is the mortgage offer, and starts by asking Archie to reconfirm that he is working with Future Tech. Archie is even more surprised now, given that just a week back he has changed his jobs. And so Archie realizes that this particular chatbot is not just about responding to an offer and understanding more details, but also an opportunity for Archie to update some information on himself and provide it to the bank. By virtue of Archie changing his job, his salary has also changed. And so Archie now provides the new salary details to the bot. The bot uses this information and comes back with a calculation informing Archie that he can borrow up to £250,000 towards a mortgage loan for a tenor up to 10 years, which will result in a monthly installment of £2,299. Archie wants to discuss this in more details with an advisor, and so he goes ahead and indicates the same. Archie now has the option of either asking an advisor to visit him or for him to go ahead and visit a branch. And he notices that the branch closest to him, Greenwich, is what is listed right on the top. He selects Greenwich and gives a date which is 3 days hence with a particular time. The bot then reverts with 2 mortgage advisors who are available at that particular time on that date in Greenwich branch with whom he can discuss the mortgage details in greater detail. So he picks Marco and confirms his email ID and books the appointment. The bot confirms the appointment, sends him the map how to reach Greenwich branch, and also reconfirms if Archie would like to set up the mortgage application. And so with this, Archie has now set up an appointment. He's obtained a mortgage application reference number. And so he is now well set for the meeting, which is going to happen 3 days hence. So as we saw just now, this particular application gives Archie sufficient ease of use enabling him to set up an appointment. Later in the day, Archie is at home relaxing, and he accesses his iPad to make sure that the recent fund transfer that he did to one of his friends has actually taken place. He accesses the bank's application on his iPad, and this particular application leads him to the dashboard, which gives him a view into his assets and liabilities, but also provides him all the new marketing offers that the bank is now offering, including the mortgage offer at 1.99%. The application also informs Archie about any upcoming payments, including the one for credit card and mobile phone that he has to do, some credit card requests that Archie had placed earlier, and pending applications. And in the pending applications, he can see that his mortgage application now appears. So Archie now brings up the mortgage application, and it has all his details already pre-filled. This gives him an opportunity to review all his details and enrich the application before he goes for his meeting in the branch. The first one is personal details. The second set of information is around his address and location details. And the third set of information is around his financial information, including the particular application that he put for the mortgage, which is 200,000, excluding the down payment of 50,000. So Archie reviews and enriches this particular mortgage application, and then the solution leads him to a stage where he has to now provide documents. Archie now realizes that he does not have his salary certificate available with him at this point in time, and so decides to save this application for later and use the mobile phone to continue applying for this mortgage when he goes to office the next day and has access to his salary certificate. So the next day comes. Archie is now at the office, and he is going to pick up his salary certificate and use that to upload and provide it in the mortgage application. Continue the journey. So Archie is in the office. He brings up his mobile phone, and he can not only see the account details, card details, but he also has access to the pending applications, including the mortgage application that was just now enriched by him when he was at home. He brings up the details of the mortgage application and notices that he's given options to upload the salary certificate. So he uses the camera on his mobile phone and uploads his salary certificate. When he continues, he's presented with the application form along with a small agreement that he needs to digitally sign. And this is done through DocuSign. So the application form comes up. Archie then does the signature on his mobile phone and completes the submission. The solution informs him that his agreement is signed successfully and provides a confirmation that his application will be processed within 3 business days. So what we saw just now is an omni-channel journey enabling Archie to start from a chatbot, continue the mortgage application on an iPad, and complete it on the mobile phone. So that completes our 4 journeys that we had lined up for you today, which is around onboarding, payments, savings, and financing. We have seen the use of the channel across different access points or touch points. We have seen the mobile banking app, we have seen e-wallets, we have seen the iPad, chatbots, all of these channels put together in a seamless, consistent user experience, enabling the customer to tell the story once and complete the transaction irrespective of the channel that he chooses. We would like to thank you for your time and attention today, and we'll be more than happy to take in your queries and questions. Please do feel free to reach out to us to book a follow-up appointment or to get more information, or if you'd like us to come and demonstrate whatever you have seen today. And the email ID is there on the screen. Thank you.
Thank you very much, Girish, for this presentation. We will now take questions, as you said, and so I would like to invite Jason and Zubair to unmute themselves again. And we have a first question here for Jason. Someone asks, what are the key empowerment drivers customers care about coming out of the pandemic?
So I think it probably would make sense to even mention the ones that they're thinking about now. There's, customers, I think as I mentioned, financial institutions, we've had some tactical things that we've had to deal with, and certainly, and consumers are kind of in the same situation where for those that, were impacted from a standpoint of economically by this, there are a few different things, government programs or tapping into savings.
So I guess Jason has a connection issue, so we'll let him fix that and maybe take a question for Veripark for Zubair. Someone asks if Veripark's omni-channel solution works with just one channel too.
Yeah, so this one is an interesting one, Kathleen. So the experience that is created, and back to what Jason was also talking about, is a seamless one. And for seamless experiences, channels should be seen as windows, and behind the channel is a single layer of engagement services, which is where the intelligence lies. And that kind of an architecture enables banks to move through seamlessly through channels. So VeriChannel as a service now is a product that kind of enables that for banks. We have clients who are using this. We have clients who started with one channel, and then they realized that the different boxes and applications that they had in their ecosystem can be replaced. And so it did happen, because in order to create an omni-channel experience, you need to have a single layer of application, one single configuration. In one place, you can mark a service on or off, and that immediately replicates across the entire ecosystem of servicing that you have. So for sure, it can be for one channel. Many banks have entered that path, or it could be holistically to create the omni-channel experience.
Thank you, Zubair. I think Jason is back. So maybe you can finish where you left off. No, he's not. So another one for Zubair then. Does Veripark have installed clients using the full suite of VeriChannel across multiple channels as well?
Yes, we do, Catherine. So what has happened is that the Very Channel product within VeriPark has matured over time. And during this time, the clients that we've been working for with deeper relationships across years have grown on this functionality with us. So we're very lucky to have some really compelling case studies. I think it would be good for the audience to know, Catherine, that they can, drop us a line at marketing@veripark.com, and we'll be more than happy to connect to take them through a few case studies in different countries, different regions. So obviously caters to the challenge at hand, but some of the things that they have done are quite amazing in terms of the business benefits that has come about. And these banks have also gone down over the years to reach out to their clients and understand as to what they have implemented. Is it really truly helping, or was that a study that they saw good pictures and good numbers as a forecast, but now they have a relevance with their own data to kind of prove that some of these things indeed work.
Thank you. So we'll try again. I think Jason Malo is back now. Can you confirm that, Jason?
Can you hear me?
Yes,
Can you
we
hear me
can.
okay?
Yes,
Oh,
we
good.
hear you. Okay. So you were talking about the key empowerment drivers that customers care about coming out of this pandemic.
Yes, and so obviously we're dealing with the here's the challenges from everyone working from home, right? That was just demonstrated unintentionally. So I think the main thing that we need to think about is going to be debt management and recovery. So it's been a pretty key thing to do tactically as people who are impacted economically by the pandemic and by the lockdowns are continuing to try to maintain their payment schedules. But certainly I know for a fact that a lot of providers have kind of put some of their payments maybe on done some forgiveness or at least done some things where the customers would be able to catch up later. So they're going to have a higher level of responsibility maybe to do some catch up. So debt management is going to be pretty key. And so if we tie those specifically to the financial empowerment slide that I had shared before, there's really going to be first and foremost maybe an ability to just make them feel better off, an ability to make them understand that while this
So Jason is gone again. I think the audience should know that there was apparently a big storm where he lives last night, which caused some internet connection troubles. So in the meantime, I can answer a few of the practical questions I see here. There are people asking when they will receive the recording. So the system after the webinar will process the recording. You will receive the link in a few hours, so you can watch it back or share it with colleagues. You will receive an email also with the handouts, but they are also available for download here in your control panel. You see a menu, handouts, and you can find both our presentation as Jason's presentation there, as some information about our new as a service, Very Channel as a service product we received. And then I'm going to ask Jason a last time if he can hear or if he can talk. And apparently he can't. No, so Zubair?
So I'm here.
Yes, okay. So is there anything you would like to share before we wrap up, since Jason's problem seems to be serious?
Sure, Catherine, I just wanted to thank everybody who tuned in. I think it's encouraging to see the same need that has been caused by the situation of COVID-19 across the world is becoming an apparent need, and the pace of change is very high for people to look at. We've been receiving a lot of inquiries around this space, and hence Ferry Park going ahead and launching this as our first as a service option, which also helps people and banks adapt faster. So the cost of entry is very, very low in terms of taking the action and engaging with us. Yeah, my thanks to everyone, and we are here to answer more of your questions, more of your specific business issues, and thank you very much for attending.
Thank you, Zubair. Thank you, Geish. Thank you, Jason. Although he can't speak, I think he can still hear us. And as we already said, we will be more than happy to engage with you on a one-on-one basis. If you have any questions, if you would like to see a demo, or yes, if you just want to talk to us. So you find the email address here. There's our website, of course. Thank you very much, and have a nice ending of your day, or beginning of your day, depending on where you are. I know there are a lot of people from Canada in this call, from Canada to Asia, so it's all time zones. Thank you very much, and we hope to see you again soon in one of our upcoming webinars.